Welcome to Houseelux Estate, your reliable partner in understanding the world of finance and investment. Today, we're stepping into the exhilarating world of stock trends, a realm that can seem complex but holds immense potential for those who dare to unravel its mysteries. Our topic for today's discussion: how to analyze stock trends using fundamental data. A crucial skill, this can be the linchpin of successful investing, offering a deeper understanding of market movements and equipping you with the tools to make informed decisions. So, why fundamental data? It's simple. This data serves as the bedrock of our analysis, providing insights into a company's health and its potential for growth. It's your compass in the vast ocean of stocks, helping you navigate the waves of market trends. So, buckle up as we dive into the world of stocks and trends. Together, we'll explore the strategies to decode the language of the stock market. Before we start analyzing, it's crucial to understand what we mean by stock trends and fundamental data. So let's get into it. When we talk about stock trends, we're referring to the general direction in which a stock's price is moving. This could be upwards, known as an uptrend, downwards, referred to as a downtrend, or sideways, which we call a lateral or horizontal trend. These trends are essential to investors as they provide insight into the stock's past performance and potential future movements. Now, on to fundamental data. This term might sound a little intimidating, but it's actually quite straightforward. Fundamental data refers to the financial and economic information about a company that can influence its stock price. This can include anything from a company's earnings and dividends to its industry position and the state of the overall economy. Often, investors use this data to determine a company's intrinsic value, which is essentially an estimate of what the company is truly worth. If the stock's current price is lower than this intrinsic value, it may be a good buy. Conversely, if it's higher, the stock might be overpriced. One common method investors use to analyze fundamental data is ratio analysis. This includes price-to-earnings ratios, debt-to-equity ratios, and return-on-equity ratios, among others. These ratios can give investors a quick snapshot of a company's financial health and performance. Another fundamental data point often considered is a company's earnings. Investors typically look at both earnings per share and overall net income. A consistent track record of growing earnings could suggest that a company is well managed and has a viable business model. To summarize, stock trends give us an idea of where a stock's price might be heading, while fundamental data helps us understand why it might move in that direction. Together, they provide a comprehensive picture of a stock's potential as an investment. Now that we've grasped these concepts, let's move on to how we can use them to analyze stocks. Fundamental data serves as the backbone for any stock analysis, but how exactly does it help in analyzing stock trends? Well, let's start by understanding what fundamental data is. In the simplest terms, fundamental data refers to the financial and economic information about a company. It includes everything from a company's earnings and revenue to its debt levels, cash flow, and even industry-specific metrics. Now you might wonder, how does all this information help in analyzing stock trends? The answer lies in the very nature of the stock market. The market, at its core, is a reflection of the collective sentiment of investors about a company's future prospects. And nothing paints a clearer picture of a company's future than its fundamental data. Think of fundamental data as a company's report card. It gives you insights into a company's financial health. For example, a company with steady revenue growth and manageable debt levels is usually considered financially healthy, which can make its stock more attractive to investors. But that's not all. Fundamental data also sheds light on a company's growth potential. Key metrics like earnings per share growth or return on equity can help investors gauge whether a company is poised for growth in the future. If the growth prospects look promising, it can lead to an upward trend in the stock's price. Moreover, fundamental data can provide valuable insights into a company's market position. For instance, a company with a strong competitive advantage or a dominant market share is likely to fare better than its competitors, which can positively influence its stock trend. In summary, fundamental data provides a comprehensive view of a company's financial health, growth potential, and market position. By analyzing this data, investors can make informed decisions about whether a stock is likely to trend upwards or downwards. With a solid understanding of the importance of fundamental data, we're ready to dive into the actual process of analyzing stock trends. Now comes the interesting part: the step-by-step process of analyzing stock trends using fundamental data. Our journey begins with gathering the fundamental data. This might seem like a daunting task, but fear not. There are numerous resources available to help you along this path. You can find this data on financial news websites, in annual reports, and even on the websites of the companies themselves. The key here is to look for the right kind of information. You want to focus on revenue, earnings, future growth, return on equity, debt-to-equity ratio, and market capitalization. These are the cornerstones of fundamental data analysis. Once you have all this data at your fingertips, it's time to make sense of it. Interpreting the data is where your analytical skills come into play. But don't worry if you're not a seasoned analyst. There are plenty of tools and resources to guide you. You might want to start with the price-to-earnings ratio, or PE ratio, which gives you an idea of how much investors are willing to pay per dollar of earnings. A high PE ratio could mean that the stock is overpriced, or it could mean that investors are expecting high growth rates in the future. Next, you can look at the return on equity, or ROE. This measures a corporation's profitability by revealing how much profit a company generates with the money shareholders have invested. A high ROE indicates that the company is effectively generating profits and could be a good investment. Then there's the debt-to-equity ratio, which compares a company's total liabilities to its shareholder equity. A high ratio could indicate that the company is financing its growth with debt, which can be risky. But it could also mean that the company is leveraging its debt to increase its profits, which could be a good thing. The final piece of the puzzle is the future growth forecast. This can give you an idea of how the company is expected to perform in the future. If a company is expected to have high growth rates, it could be a good investment, but it could also be risky if the growth doesn't materialize. Now that you've interpreted the data, it's time to apply it to predict stock trends. By comparing the fundamental data of different companies, you can get an idea of which stocks are undervalued and which are overpriced. You can also use the data to identify trends in the market and make informed predictions about future stock prices. And that's how you analyze stock trends using fundamental data. It might seem complex at first, but with practice, it becomes second nature. We've covered a lot of ground today, so let's quickly summarize what we've learned. We kicked off this journey by defining the basics of stock trends and fundamental data. Stock trends, as we discussed, are the general direction in which a stock's price is moving, be it upwards, downwards, or sideways. On the other hand, fundamental data refers to the hard, quantifiable facts about a company that can give us insight into its financial health and future prospects. We then took a deep dive into the role of fundamental data in analyzing stock trends. We learned that stocks do not move in a vacuum. They're influenced by the company's earnings, revenues, cash flows, and other fundamental factors. By understanding these, we can make informed predictions about a stock's future direction. Next, we walked through the step-by-step process of using fundamental data to analyze stock trends. We started with understanding the company's financial health by looking at its balance sheet, income statement, and cash flow statement. We then moved on to evaluating the company's performance relative to its peers and the market as a whole. After that, we considered macroeconomic factors and industry trends that could impact the stock's direction. And finally, we assessed the stock's price trends and used technical analysis to identify potential buy or sell signals. In essence, analyzing stock trends using fundamental data is about marrying the art of trend analysis with the science of financial analysis. It's about understanding the story behind the numbers and using that knowledge to make informed investment decisions. Remember, as with any investment strategy, it's crucial to do your own research, stay informed, and never invest more than you can afford to lose. The journey to successful investing is a marathon, not a sprint. Thank you for joining Houseelux Estate on this journey. Don't forget to subscribe for more insightful videos on finance and investment. Until next time, happy investing.